I just observed it across the charts and I was like, okay, this is happening too many times and maybe there is something behind it, a strategy can be developed on it. I basically spotted it by myself and then developed the strategy on it. I'm entering on a lower time frame. So this 4-hour time frame, this is basically to understand the bias, whether in which direction we're trending. That's all. Our entry is going to be on the 5-minute breakout structure. Price is going up. If it breaks the structure here on the 5-minute, this is where we enter. But this strategy is one of the best to trade if you are especially on a prop. The reason I'm able to spot it so easily is because we set this up. Now if it breaks here, we take a direct impulse entry. There we go, entry is triggered. We play this. There we go. And honestly, it's not that rocket science. It's absolutely.
Keeping it simple is better.
Absolutely.
So in order to learn your strategy, where should we start off?
So first thing we do is we wait for Asia session, right? Asia session close, which happens about 9 a.m. Dubai time. When Asia session closes, first thing is we see where Asia session is closing, how the range looks like. So if let's say this is Euro USD, we put an indicator, just a session indicator, which shows us the high and the low of the session. So let's say this is the high and the low of the session. This is the chart. Now in simple language, what we have to do is the second thing, where we look at the 4-hour time frame. We identify the bias, whether where we're trending downside or trending upside, whether we're bullish or bearish. Let's say in this scenario, the 4-hour time frame is bearish. Now if you're bearish, we want to take a short trade. But for us to go short, there needs to be a liquidity sweep of Asia highs. We know that the price is trending downside. We are going to wait for Asia close. Let's say Asia closes here. We want the price to do something like this, give us a bearish structure here. We enter here and we target Asia lows.
Simple as that. So you're only trading Asia session.
London, basically Asia close. You can call it pre-London.
Pre-London,
Pre-London,
that makes sense. And for someone watching this now, you're showing this on Euro USD. Can they apply this to gold? Can they apply this to indices?
So this specifically, it does play out on gold, but with not this level of accuracy. So I mean, people, they have the system in front of them. They can test it themselves. But I have tested it on Euro USD and it works the best on this. So I recommend doing it on Euro. If it worked on every other pairs, I would have traded this strategy on every other pair, but it works the best on Euro.
Gotcha. And for someone maybe Asia session's too early for them.
Yep.
Can they do this from London close to New York open? Like how you do it Asia close to pre-London? Can they do it London close to New York?
Yeah, so they can try this on gold, on XAU. They can probably try this on gold and see if it works out. But again, I've tested this. It works the best on this particular time frame.
Right now, you're focusing on only the 4-hour time frame, or are you entering on a lower time?
I'm entering on a lower time frame. So this 4-hour time frame, this is basically to understand the bias, whether in which direction we're trending. That's all. Our entry is going to be on the 5-minute breakout structure. If this is the 5-minute time frame, price is going up. If it breaks the structure here on the 5-minute, this is where we enter. This will be our stop loss over here. And let's say our target will be over here. This is more than 1:2, but usually I like to target 1:2 to not be very greedy. If the price is somewhere here, there's a very high chance that it's going to take out Asia lows. But again, just to keep it very simple, I recommend starting with 1:2. And of course, later on in the future, if you get more confident with it, you can increase the rest reward as well.
Okay, so Umar, this strategy is pretty simple and straight to the point. I think for the people watching this, if you can't understand this, you probably shouldn't be trading. But I really have no more questions. So I would love to hop on the charts and have a more in-depth trading session breakdown of how this strategy actually applies.
Let's do it. First thing we're going to do is we go to indicators. We type in FXN. And you'll see the one on the top, FXN Asian Session Range by Rob Minty. This is the one you want to apply on the charts. So this is what I've applied. And once you do that, you will see these session boxes across Asia session, London session, New York session. Sometimes the timing is a little off depending on your time zone as well. So just confirm. So like for example, in Dubai time, Asia closes at 9 a.m. So I've just adjusted it because as per the indicator, it was closing at 10. So I just adjusted it -1 hour as per Dubai time. By the way, your timings were New York. So I just changed them to Dubai. Now we have Asia session. As per the rules, very simple. We start on 4-hour time frame. We just spot the trend wherever it is, whatever the price is doing based on market structure. So here we are, 4-hour time frame. What does it look like? Clearly bearish, right? Just going lower highs, lower lows. Even if I go zoom out, it's still bearish. So we know one thing, that Asia is bearish. That means if it is bearish, we wait. We want to take a trade on the downside. That means we wait for a sweep on the higher side, Asia high. Now here you can see Asia closed. Then we have the price taking out the highs. So this is second step where now we wait for a bearish break of structure and there it is. So this was the previous high low. Price broke it, right? And in this scenario, what you can do is if you again get another bearish break of structure.
Yeah.
So the next bearish break of structure would be this low, right? If it takes out this low.
Why don't you do a couple points above?
I mean, you can do that. I mean, yeah, of course, I could have said that and we could have saved that trade. But again, I like to keep it a little tight so that, usually what happens, if it has to go in your favor, it will just go immediately. And if it has to go against you, it just goes immediately. This is a very rare case scenario where this happens. So again, now if let's say we have to re-enter, it would be like this. So this is how I'm not sugarcoating an example. We hit a stop loss in the first example.
Yeah, it's good.
All right, now we set this up. Now if it breaks here, we take a direct impulse entry. There we go, entry is triggered. We play this. And there we go. We hit our target. And let's say, so now as per this, let's say we are net profitable 2% because we lost in the first again. Okay, now here, this is a tricky one.